Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be summarizing the last week of August. How time flies, by the way. So at the end of last week, we ended on £120,108. And at the end of this week, we ended on £119,425 for a 0.5% loss, which equates to £682.77. We were up for most of the week, actually. And then right at the end, there was a bit of a sell-off. So we went from £403 up to the earlier mentioned loss. Now, normally what I'll do in this period is, because the whole market is down, I would generally make an addition to my pie. The reason I didn't was due to this chart here. So this is a summary of the average monthly return for the S&P 500 for about the last 100 years or so. It goes up to 2023, but the sentiment is still the same generally. So what we see historically is that there is usually a bit of a sell-off during September. So that means I'm gonna hold on to some of my funds. I normally generally invest in the first week and the third week just to try and split up and try and dollar cost average a little bit more. But for now, I'm going to wait maybe until the end of September just to see if this trend continues. And if it does, then I'll be buying the stocks at a cheaper rate. But my strategy will be to continue to keep buying, but I will wait for better entry opportunities because it seems like the market sentiment suggests that there will be some level of pullback as the S&P is performing so well so far. It's had 2 years of 20+% returns. So some people are suggesting that there will be some level of pullback, and I think there will be too. So I'm gonna wait for that, and let's see how we're looking at the end of September. Now, in terms of what happened this week, well, one major company reported earnings, so that was NVDA. Now, this is really significant, this company, to the overall stock market. It accounts for about 8% of the S&P 500. So if it does well, generally the S&P 500 does well. Now, you'll be happy to hear that NVIDIA beat both on its revenue. So the market expected 46.06 billion, and it ended up reporting 46.7. And earnings per share was $1.05 with estimates at $1.01. Again, a solid performance. Now, what was important during this call was the guidance given by the management. So the guidance was very strong. They are forecasting to hit $54 billion in revenue for the next quarter. And this is slightly above estimates. But what is really important, that this guidance of 54 billion does not include China sales. So if you haven't been following NVIDIA too closely, the US government stopped NVIDIA selling chips to China due to the major one is national security. But most recently it said it will allow it, but it may impose a 15% tariff on NVIDIA sale. Now, when that news initially broke, it seemed like NVIDIA were okay with that. But I think recently there was some news coming out that NVIDIA is due to contest that. But either way, it is allowed to sell chips to China, and they're not including this, but some people are suggesting that this number would be between $2 and $5 billion. So if that comes in as well, then it seems like share price move will be quite on the optimistic front. So this is really important because a lot of the S&P 500's gains this year has been propped up by companies like NVIDIA and the AI wave. And it seems like it's going to be continuing. So this is a company, it wasn't my biggest holding just because I wasn't sure how long this AI boom is going to last. But most recently, I added a bit more to it, and it seems like from this guidance that it's going to continue, at least for the short term. So this is one I'm going to continue to add and remain bullish on. So the other things that it was announced was a $60 billion buyback. So buybacks are really good because it reduces the amount of shares out there in the market, which increases the value of each individual share. So that's really good. So yeah, that was an important occurrence within the market, and it went in our favor. So that's really good. Now, not too much movement in terms of, so I would like to generally cover those companies that have gone up or down by 2.5%. Although most of them are just trending, below that, and it's not worth mentioning. But overall, there were more losers than gainers this week. In terms of losers, let's look at the top three. So in at number 3, we had Elgen, which is down 3.5%. Hims down 4.5%. Was doing all right for the week, went up to as high as $45 and settled at $42.56. This company experiences a lot of volatility, and that's continuing, but it's one I'm going to be continuing to hold. And the biggest loser for the week was Robinhood at minus 5.23%. But again, this one I'm really bullish on. I think this company is going to do very well going forward. If you've enjoyed the content so far, please, if you can kindly give it a like, go on, just press the like button now. It helps push out the content to other people. If you're interested in my journey, please subscribe so you can follow. Hit that bell icon so it notifies you when I do upload, so you don't miss an update. In terms of the best performers, one of them was Carnival PLC. Look at this return so far, 126%. By far my best performer in the portfolio, which is crazy because I held companies like NVDA as well. But yeah, 126% up, 2.91% for the week. I hold just under 300 shares, and the position is quite chunky right now, just under £6,500. And the best performer for the week is my biggest holding, up 3.21% for the week, up just under 23%. And this is an all-time high for Google. It ended up at $212.70, went as high as $213. Now, this is quite an interesting week for Google because there is due to be an announcement on the ruling of whether they have to sell Chrome or not. Now, the ruling is expected to occur in August, so we're right at the end now, so it's going to be happening any time now, but the market seems to be going up, which hopefully means the market sentiment is that it's going to be okay, it doesn't have to sell. If it does have to sell, Google's price is going to drop. So this is an important time for Google shareholders, including myself, as it's my biggest holding, and let's hope for a favorable ruling for that. But yeah, getting close to £17,000 in terms of value and up over £3,000. And if you follow this account, for ages, let's have a look. It was down to, about 170-ish. I remember making many videos that it's going to go up to, 200 at least, and it has done. And I am expecting it to go to about 220 by the end of the year. It's quite cheap in terms of its PE ratio, still under 25, where most of the other big tech companies are above the 30s. So this is still seen as quite cheap. Another milestone is Imperial Brands going past the £4,000 in gains mark. This is my biggest gainer overall. It's important because, as mentioned earlier, there is considered that there will be some level of pullback from the market. And if that does occur, then I might look at trimming certain positions. And one defensive stock is tobacco, where in terms of during hard times, tobacco companies do quite well. So I might consider adding one more potentially, but we shall see. But this has performed really well for me. So the 3 options are, if I do, are Philip Morris, Altria, or BAT. BAT is a UK one. I started doing some analysis on that, so I'm going to do some more and let's see what happens. So I might look at trimming some of these positions just to hold some cash. So when the dip comes, I buy at a favorable rate. But overall, just a quick glance at the portfolio. As we can see over here, up just under £28,000 in overall total gains. Visa, MasterCard, these are also 2 companies that do okay during hard times. So I'm happy that they represent quite a big bulk of my overall portfolio, so accounts for just over 15%. Meta up 24% for a 1.6k gain. Robinhood slightly down, 4.35%. Microsoft up 27%, pretty much a flat week. But I hold 17.76 shares of this at an average cost of $368, and it's currently trading at 500. So this is another company that is quite solid, and happy for it to be a 5.5% holding within my portfolio. Carnivore, as I mentioned earlier, superb performer. NVDA, let's have a look. So the earnings went down slightly, but this is a company that's going to continue to do well. At $173, my average cost is 106, so doing well on that, up 56%. Tesla slightly down for the week, ending at $333. My holding is 21 shares at $207 per share, so up 50%. Now, if there is a company that you can trim during volatile times, it's this one, because it is just naturally volatile anyway. And during a pullback, companies like this suffer quite a lot. So this is one that potentially I could trim, and I did trim a little bit of it recently. Oscar slightly above break even. These are good signs, especially after Warren Buffett bought in this sector. This one should do okay. Broadcom up 1% this week. It's pretty good considering NVIDIA was down, but another solid performer, up over £1,600 on this. My average price is $188, and it's currently trading at just under 300. So really solid performer. And if NVIDIA is due to do well, then Broadcom will do well as well at the same time. Amazon up 18% for a £681 gain. Let's have a quick look at that. Over the quarter, decent, up 11.5%. I hold 25 shares at an average cost of $182 and currently trading at 228. So we mentioned Google's PE earlier. So as you can see, another one of the Mag 7. This one trading at PE just around 35. So slightly more expensive to buy than Google, for example. But again, another solid stock that will continue to do well. If we look at overall historic performance, look at that. Since 2017, we're up over 1,300%. So yeah, this is a company that's going to continue to do well. Elgen, mainly held for its dividends. This company historically doesn't do great in terms of its share price growth. But in hard times, this is quite a non-volatile stock. So this is worth holding in tough times which are due to come. Centric got 45%, decent dividend to pair too. Rio Tinto, again, every week we mention this company that is struggling, and if it does ever return to green, I intend to sell it. Cost got up just under 16% for a £315 gain. Apple up 16.6% for a £261 gain. KLA up 5%. And ASML down. Had a decent week actually. Before the end, it was up at some point. It was up 0.5%, hitting 770. But this company, again, I really don't understand why this, with all the semiconductor and AI companies doing well, that this one is not doing well, because this is quite a pivotal company in this sector. So it's unusual for it to be doing badly, but again, this one will recover. So that's it. Thank you very much for joining me, and I will see you on the next one.